Ethereum is one of the largest and most popular cryptocurrencies on the market today. In fact, it has separated itself from the pack and seen major success with integration into NFT marketplaces, decentralized finance programs, and more. That being said, things may be about to change. The fear of missing out, otherwise known as FOMO, is beginning to reach a fever pitch within the crypto space. Ethereum is about to reach a turning point that could establish it as the go-to digital asset. In today's video, we're going to explore what the upcoming Ethereum merge is and what it means for the crypto's value. We have some comments from a major exchange's CEO as well as in-depth explanations of our own so that you can capitalize on the situation and avoid your own FOMO. Make sure to stick around to the end because we will be laying out some strategies for building your own pile of Ethereum as the merging day approaches. Welcome back to Profit Protection. Let's dive right in. Ethereum has been a major player in the crypto space since its inception in 2015. Despite lagging behind the flagship Bitcoin, it has attracted a vast following due to its specialized coding and efficiency. There are quite a few reasons that people fancy Ethereum. One factor that popularized the altcoin was its smart contract functionality. This means you can build an application on Ethereum's blockchain to ensure security and tracking. For this reason, most NFT projects are built on Ethereum's blockchain so you can track ownership of tokens. Vitalik Buterin and his colleagues created Ethereum with the intention of the system being used for more than just a simple cryptocurrency. Despite this, it has become the second most valuable cryptocurrency in the world. If you want to hear more about Vitalik, his story, and his fears over crypto's future, we highly recommend checking out our past video on the Ethereum CEO and founder. Now, years down the line, Google searches for Ethereum are peaking once again. Ethereum has been growing in popularity for years, but why is there so much FOMO floating around right now? There are big changes coming to the way Ethereum is set up. Every investor who holds Ethereum is also holding their breath as they wait to see how the upcoming merger will affect the coin's value. The merge has been on the calendar for a while now and it may mark a new chapter for cryptocurrency. The merge basically consists of Ethereum's new and old networks combining into one. This is important because the newer networks allow users to earn new Ethereum without consuming large amounts of electricity mining the coin. There are plenty of more technical details that we could go into, but it will suffice to say that this merge will upgrade the entire Ethereum ecosystem to conserve huge amounts of energy and decrease transaction fees for everyone. The official timeline for Ethereum's merge is set for June 2022. That means we're getting quite close, and it's been whipping up plenty of excitement online. All of these changes are expected to attract more users and keep the cryptocurrency relevant for investors and other projects. Last week, Yahoo had the Abra Exchange's CEO on for an interview to explain more about why he believes Ethereum is only headed up. Bill Barheit founded the crypto exchange Abra in 2014 as both a marketplace for trading crypto as well as a safe wallet for investors to hold their currencies. In his interview with Yahoo, Bill explained why he felt Ethereum has what it takes to grow much larger. Bill's exchange, Abra, is handling more than $2 billion worth of crypto assets at this point. He understands the market and its signs very well. Luckily, he's quite bullish on Ethereum. Let's listen to exactly what he said.
Yeah, so Ethereum is super exciting to me right now. And first of all, thanks for having me. And so at Abra, we're seeing tremendous institutional interest right now in the crypto markets, way more than last year. Last year, we saw a lot of high net worth money coming in. Now we're seeing a lot of institutional interest as well, particularly in Ethereum. Ethereum is really establishing itself as what we call the world's computer, right? The backbone potentially for the decentralized Web3. And it's being used now in stable coins. It's being used for NFTs. It's being used in DeFi to the tune of hundreds of billions of dollars total value locked, with tremendous transaction fees being generated.
As Bill mentioned, there's substantially more interest coming from institutional investors this year than in the past. These large firms and organizations will follow the money, so if they're hearing from their customers that crypto is in demand, they will adjust their operations to fit it. This is only pushing the price of Ethereum higher as demand increases at faster rates each year. There is also the Ethereum merge that's cooking up plenty of excitement. Bill explained it very well in the same interview.
Proof of work mining is this idea that a whole bunch of computers basically play a game against each other to find new Ethereum and also insert pending transactions into the Ethereum blockchain. That's also how Bitcoin works today. And you pay gas fees, which is actually Ethereum itself, in order for the right to insert your transactions. That whole process is about to be replaced. A new version of Ethereum, which we refer to as the Beacon chain, went live. And it's running on its own right now. And this Beacon chain uses proof of stake to validate transactions. In simple terms, that means that people become validators, or nodes become validators of transactions. And basically, whether or not you validate a transaction is partially dependent upon how much Ethereum you stake, and no longer dependent upon mining. Probably sometime in June or July, the Beacon chain is going to merge into Ethereum. When that happens, Ethereum will begin validating transactions using this proof of stake model that I just described.
Bill made a ton of great points, but no one can truly predict the markets. You might be wondering, what could stand in Ethereum's way? There are no guarantees in the world of crypto trading. There are 1,000 outside forces, regulations, and opinions that could sway prices back and forth. Everyone seems to be excited at the possibility of Ethereum going to the moon. But what happens if it doesn't? This could be the beginning of a bigger, better Ethereum coin. It could also be the start of its downfall. Let's take a look at some possible issues that could hinder Ethereum's growth. Alternative coins are becoming increasingly competitive. Just like Bitcoin had the advantage of being the first cryptocurrency out in the market, Ethereum had an advantage as a go-to alternative coin. It certainly still does, but that gap is being closed a little bit more each and every day. Take Solana, for example. This coin has been up and coming for a couple of years, but is sitting well within the limelight now. There are thousands of projects across the DeFi space being built on the Solana blockchain. It is decentralized and made of only one layer programming, so the community can put their trust in its current form. Here's the kicker. Transaction fees on Ethereum blockchain right now can often cost up to $100 or more. Solana pledges on their website to keep fees below 1 cent. While Ethereum may have had a big start, it's things like this that could threaten its market share in the future. Scaling issues continue to surface. As the ecosystem of Ethereum grows, the technology must be able to grow alongside it. There's been a massive influx of users not only holding the coin, but using its protocols for NFT contracts and more. There were 18 million unique addresses on the Ethereum blockchain in 2018, and that number has now topped 192 million. Due to the increasing number of transactions, mining, and more on the blockchain, there have been speed bumps for the development team to handle. The demand put on the blockchain causes a notable amount of transactions to fail, and fees balloon to uneasy numbers when there's plenty of traffic. Even though there are some things that are hindering the network, analysts seem convinced that Ethereum is shaping up to be a great investment. So what can you do if you want to profit off the currency? Here are 3 things to keep in mind if you're suffering from the dreaded FOMO, the fear of missing out. Number 1, the merge is priced in, but that doesn't mean the future is. Unfortunately, if you're hoping to make big bucks off of Ethereum's merger, you were likely too late. Much like big events in the stock market, it has already been priced in. In other words, most investors and groups that wanted to profit off of this have probably already bought their share of the cryptocurrency. That being said, no one knows for sure where the price will go. If the value of Ethereum jumps off the charts, you won't have regret having waited until now to buy. It might climb and keep climbing. On the other hand, it may barely move and then sink lower. This means you should approach buying Ethereum right now the same way you always would. In other words, don't use the money you can't afford to lose. It might not go up as far as you hoped. It might take longer than you expected or might even go down. Understand that most people who are excited about this event are already holders of Ethereum. Number 2, stake Ethereum that you currently hold as the merge takes place. When the merge has taken place, new coins will be created as a reward for locking in your coins to help support the network. This process is called staking. When you stake your Ethereum, you are allowed to become a validator for transactions. By doing this correctly, you earn more Ethereum and there's no need for mining. If you already hold Ether, you can begin making money right away. It's important to look into the risk of staking and becoming a validator. You can incur fines and lose Ethereum for certain actions as a validator with staked coins. For anyone looking to make the most of their Ethereum wallet, it's worth looking into staking. Number 3, wait to buy the dip. There are a lot of opinions and analyses of how the price of Ethereum will react to the merger. It is nearly impossible to know exactly how the market will react after it takes place. That being said, there are only a few options. Even if the price of an Ether coin rises significantly, it will sell back down afterward. If you do not profit off an initial jump in value, waiting until the price rebounds can help you avoid being burned by the fear of missing out. If the price begins to rise as the merge happens, don't let your emotions override logic. If the value of Ethereum dips post-merge, it's an even better time to buy. As long as the merge is successful, this will only set up the network for bigger and better things. The future of the Ether coin is looking up, so if you see a dip, take into consideration. Cryptocurrency is changing the way we understand money and value. It is helping the regular layperson take back control of what they do with their finances. We truly appreciate your views here at Profit Protection. We are bringing you valuable information and ideas from the thought leaders across finance, cryptocurrency, and digital asset spaces. If you enjoy this channel and have learned anything from it, please offer your support by liking and subscribing. It helps us to continue bringing you high-quality content that both educates and entertains. Once again, thank you for tuning in. See you next time.